Hi, I'm Kaylin Anderson on the Bill Azell team and approved by Bill.com. And today we want to ask Bill some questions that borrowers ask us about conventional loans. So first of all, Bill, what is a conventional loan?
So for our purposes, a conventional loan is a loan that will eventually be sent to one of the two agencies, Fannie Mae or Freddie Mac, and it's following those guidelines. So for today's purposes, that's what it is.
Great. So can you tell us about some of the great flexibility with down payment options?
Yeah, the one nice thing about a conventional loan is if you do have 20% down, there's no mortgage insurance. So a lot of the other products require mortgage insurance regardless of the down. We can go as little as 3% down. If we go with 3% down, one of the borrowers has to be a first-time home buyer. Typically 5% down, we can go all the way to a loan amount of $493,350, which is the maximum loan amount allowed in Denver. With mortgage insurance, there's several options we can look at. The one I prefer most is the monthly mortgage insurance, because with most servicers, after you have 20% equity, you can petition to get it removed. And with Colorado going up so quickly, a lot of my buyers have been able to get rid of the mortgage insurance in one to 2 years without refinancing. You also have the option, if the market levels out, of just adding a one-time premium on top of your loan amount at the low rate. We also have the option of a lender-paid mortgage insurance. The rate might be a little bit higher. So there's a lot of options with mortgage insurance on a conventional loan that the other products just, quite frankly, don't offer.
How about income requirements?
Incomes become much more flexible. So in the past, it was 2 years taxes, full documentation, everything. Had a lot of changes. So if you're a wage earner, pretty much 1 year W-2 and a month of pay stubs, we're good to go. Self-employed, they really loosened up. Typically, we had to average 2 years of income. So if your most recent year happened to be much lower, or if it spiked, you were in trouble. Because if it dropped too much, you were denied because they said your income was dropping. If it went up, you didn't get the full benefit of a higher income. So now, if you had your business for 5 years, you can count on 1 year tax returns and we don't have to deal with the questions. If you're under 5 years, most cases, I'll get away with 1 year tax returns. So very flexible. Other income types, commissions, bonuses, overtime, tips, those kind of things. Typically, we want a 2 year average on those. There are some exceptions though, and everything I'm telling you today, there could be some exceptions. Fixed income like Social Security, non-taxed income. Generally, I can use deposits into the bank account if we need to. If that's all we can get, I can use that. I can use 1099-Rs. I can use award letters. We've got a lot of flexibility on the income depending on the source.
Lots of borrowers think you have to have near perfect credit to do a conventional loan. Is that still the case?
No, not the case anymore. The conventional loans go all the way down to a 620 credit score. Your mortgage history does not have to be perfect. So I run it through the automated underwriting. I've had people with mortgage lates in the last 12 months and it approves it. The general guidelines is 7 years on a bankruptcy, Chapter 7, 2 years from discharge on a Chapter 13 or 4 years from dismissal. But some of the nice flexibility on a conventional loan is if you put your property into the bankruptcy and surrendered it, I can use that. So you're 4 years on that. I'm 4 years on a property that went through short sale or deed in lieu, not the 7. So some pretty good flexibility on that. Debt ratios were recently increased with both agencies where I can go up to 50% of your income if it's a stronger profile. So there's a lot of good things going on with the flexibility on credit as well as debt ratios.
Can you touch on loan amounts and appraisals?
Yeah, so the appraisal process also has gotten easier. Right now, I'm finding the majority of my refinances are coming back not requiring an appraisal. And even on some of the purchases, you might get what they call an appraisal waiver. And I think this will pick up speed as time is going because Fannie Mae's been testing it for several years and they're gradually using it more and more and more. So it can save you a lot of money if we don't need an appraisal. Another nice thing is Denver is $493,350, the Denver metro area. So very high maximum loan amount to keep it in the conventional loan. Also too, on the conventional loan with the appraisals, much more flexible. The property does not have to be in near as good a condition as some of the other products. Like you hear about peeling paint issues with other products, you're not gonna have that here. Utilities, I might not even need those turned on. So it's just a lot of flexibility, as well as the comparable sales with conventional loans, probably the most flexible. So if you're in a rural area or mountain area, they give us a lot more latitude on coming up with the value than some of the other products.
Can you talk about day one certainty or the rocket mortgage that we are hearing so much about?
Yeah, you can't watch TV without seeing the rocket. So it's just day one certainty, which Nova is not committed to yet. So what day one certainty is Fannie Mae has developed in their software the ability to input your bank account information. So you, as the borrower, have to input it. We also have a direct connect with the work number. So if your employer is one of these big national employers, they're with the work number. So basically, you input this data, you hit a button, Fannie Mae will accept that documentation as good to go. So you don't have to provide bank statements, W-2s, or pay stubs, which sounds great. And if that data is perfect, the computer underwrites it, you're good. The question in our industry is, can an underwriter go back and make a make sense decision to override what the computer sees? And that question's still out there. And so Nova's point of view is, no, we need professionals looking at your information and making the right call. Like I had a gal that's been with the company 9 years, never taken off the summer. This summer she went part-time to be with her kids because it's a one-time event. If I used day one certainty, she would have been denied because her year-to-date income is dropped. With an underwriter, with the right documentation, we're going back to using her full salary because she's starting up again on September 1st. So that's the difference with the Rocket. The Rocket is great if it's vanilla, but if there's anything that you need a professional for, it's not going to work, and that's why you hire Nova.
And lastly, can you explain the type of assets we can use for close?
Yeah, so conventional loans give us a lot of flexibility. So you can use gift funds. I can use secured funds. So if you took a loan on your automobile, your 401k, various HELOC from another property, that's absolutely fine. If you're using assets, I got to use a 2-month average. So like bank statements, mutual funds, stock accounts, I have to use a 2-month average, and I have to verify deposits that are over 50% of your monthly income. So if it's below that, I don't have to worry about the verification. You can also use down payment assistance programs. We do have a down payment assistance program that goes with the conventional loan. So there's a lot of flexibility as far as down payment as well.
Thanks so much, Bill, for answering those questions. Again, I'm Kaylin Anderson on the Bill Ezell team with ApprovedByBill.com. And we covered a lot of guidelines today, and just keep in mind that there are exceptions to all of these guidelines, and that's why you want to come to Nova Home Loans. Bill has over 20 years experience in the industry. He's one of the top 1% originators in the United States, and we can make exceptions. So call our team, we're here to help you.